Hello traders, and welcome back to the Forex Chick. Today we are going to be talking about pivot points, which is an essential tool for any serious Forex trader. So let's get started. Pivot points help us identify key levels in the market, allowing us to make informed decisions about where to enter or exit trades. So it highlights potential support and resistance levels. That's just what it does. Potential support and resistance levels. So whether you're a day trader looking for quick profits or aiming for strategic entries, understanding pivot points can significantly help enhance um, your trading strategy. So make sure you watch this video to the end, as I will be covering the essential components of pivot points analysis. So this is the Euro USD chart on the daily time frame, and this is TradingView platform. So let's get started. The foundation of pivot point analysis lies in its mathematical calculation and precision. There are variations like the standard pivot points, Woody's pivot points, Camarilla's pivot points, Fibonacci pivot points, and DMARC, and each of them offer unique approaches to market analysis. But this video we'll be focusing on standard pivot points, but you're encouraged to explore our channel for in-depth analysis of these alternative pivot points calculations. So first I'll add the standard pivot points to my chart. You simply click here and search pivot point standard, this one right here. I'm going to add it to my chart. Yeah, it's on my chart right now. So you can see the lines. Now I'll explain what these lines mean and how they are calculated. Let me change the color to black. Okay. I think I should stop at R3 and S3. Right. So the pivot points, the standard pivot point calculation takes into account the previous day's high, low, and closing prices to generate key levels for the current trading day. So the central pivot line serves as our baseline. The central pivot line is denoted by P, you can see here, P, and it's calculated by the high of a day plus the low plus the close, all divided by 3. So let me explain. This is the daily chart, and you can see the previous day was a bullish day, and to calculate the baseline, which is P, you're going to add the high, which is this. Let me use my arrow to demonstrate this. The high of the day plus the low of the day plus the close, all divided by 3 to give us the base pivot line. Now from this pivot line, from this central pivot line, we derive 3 support levels: the S1, the S2, S3, and 3 resistance levels: the R1, the R2, and the R3. So let me go to the 1-hour charts. I prefer to use the 1-hour chart for my analysis because it helps filter the noise in the market, unlike the 5-minute chart or the 15 minutes. So you can see central pivot line, the resistance 1, the R2, the R3. You can go on to R4 and R5, but I don't think price is gonna get there. But it can. But I prefer to just stop at R3. And there's S1, S2, and S3. So, and The next day you have central pivot P, S1, S2, these are support levels, S3, and you have resistance level R1, R2, and R3. So the formulas remain constant. To get the R1, all you need to do is the pivot times 2 minus the low of the previous day. Or if it's for the support, to get S1, you just do the pivot which is 1.08086 times 2 minus the high of the previous day. That is going to get you the support levels. But enough mathematics. I just want to explain the concept behind pivot points. So let's talk about how you can use these pivot points to trade the market. So like I said, they act as support and resistance levels when trading. So when price approaches a pivot level, you often observe increased market activity. The central pivot serves as a key reference, which is this P, serves as a key reference for market buyers. Price action above this level suggests a bullish sentiment, while trading below it, below the central pivot, indicates bearish pressure or a bearish sentiment. So the support level S1, S2, and S3, S4, and I think stop at S5, they all represent potential areas where downward price movement may slow or reverse. For example, price is currently bearish, so we're looking at the S1 for potential reversals, because that's the support level, that's the pivot support level. So as price approaches these levels, you can watch for signs of buying pressure, such as candlestick patterns or increased volume in the market. And that's the same for the resistance. The R1, the R2, and the R3 indicate potential ceilings where upward price movement might stall or reverse. So you look for signs of selling pressure at these levels, which could be potential trend reversals or continuation of a downtrend. So that's how you interpret, you read the market using pivots. So let's talk about the strategy. How can we use pivots to trade? I'll use gold to explain this. This is gold chart on the 1 hour time frame on gold. So now I will advise you not to just use the pivot alone. Always trade in line with the trend and the general market context. So there are so many pivots, central pivots, and support and resistance, but let's filter all of that. You can see price, gold has been bullish. Gold has been on an uptrend. Let me hide this pivot. You can see gold has been on an uptrend. So we should be looking for buys, strong buys, but doesn't mean that we can't catch some reversals. So we'll see how to catch all of that using the pivot. So you can see this trend line here. Price was consolidating. You can see it as price was consolidating right here, and you can see price got to the S1 here, which is the support, and we had this reaction. And price reversed. Remember, we are consolidating right here, but the overall market sentiment is bullish. So when price got to this upward level right here, we had this tapping in the central pivot. Price came back to tap into the central pivot, but you can see we had the tapping to this trend line right here, which As you can see from that, price gave us a reversal to the downside. You can see price had this reaction to the S2, which is a support level, a pivot support level. The S2, you can see this candlestick pattern right here, which is a red, call it three inside up candlestick pattern. The red followed by the green and the green candle, and that is a potential place to buy. Your stop loss could be below this level, below this swing low right here, and your take profit can be at the nearest resistance. And that was all from buying from the support level S2 and also from our trend line right here. And we bought, and you can see price reacting from the R1, which is the resistance pivot resistance level R1, and it's also our in correspondence with our trend line. You can see the trend line right here. Price reacted quickly from the trend line, and you can see this quick drop right there back into the central pivot. Now, but you should know that we are bullish, so we are the overall market sentiment of gold is bullish. So price broke this trend line right here, had this pullback into the central pivot line, and you can see the bullish sentiment continued after the breakout and the reversal to tap into this central pivot line. So you can see the reaction from the R3 pivot line right here. So price broke this support level right here, giving us a good confirmation for minor sells. Remember, price is bullish, so your sales should just be minimal or minor. Take profit at this support level right there. Price reacted from the central pivot line easily. This was a nice reaction. Have this doji right here. You have this reaction here. This is potential reversal reaction. That's a hammer, but that's a hammer candlestick pattern, and you can see price reacting off that and continuing the bullish trend. So that is for the bounce strategy. Like I said, you can use two strategies. The bounce strategy involves entering trades when price bounces off a pivot level. You can enter a trade when price bounces off a pivot level like the resistance level, the central pivot level, or this support level. It could be the S2, it could be the S1, but you should trade in line with the market sentiment at the moment, the overall market sentiment. Like gold is bullish, so we are looking for bullish signals and bullish trade opportunities. So the next strategy you can use to trade the pivot is the breakout strategy. The breakout strategy, like the name sounds, is to capitalize on strong momentum that often follows a break of a key pivot level. So when price decisively breaks through a pivot point, traders enter in the direction of that breakout. So you confirm a breakout with increased volume. You can see right here we had this breakout of the R1. Price broke out with volume, and you can see this retest. Price broke out of this R1, massive breakout, a retest, and continuation to continue the bullish trend. Price broke out this R1 pivot level right here. You can see it. You can see this breakout, and you can see the retest to continue. So these are potential support and resistance levels in the market. So that's how you use the breakout. You can see we entered into a consolidation right here. We had this trend line. Remember, the overall sentiment is bullish, so This is just a flag, a bullish flag, and you can see right here from this we had this pullback right here, which price reacted off this support level. Price didn't exactly touch the S1 level, but you can see the S1 level corresponds with the support levels that are sitting right here. And price reacted to, sorry about that, sorry, price reacted, and you can see price react from this trend line right here, and you can see the consolidation just continues until we had a massive breakout to the downside and a reaction from the S2. But if you look at this our trend line, there was a breakout of the trend line and a pullback. Price broke out of this trend line right here, but there was a pullback to the pivot level. Let's tap into it. You can see price go down to the S2, and S2 is a potential support level, and price reacted off that, had this consolidation, and price was able to continue its bullish trend right here. You can see this pullback right here to tap into the pivot level, central pivot level, and continuation of the bullish trend. That is how you can use the pivot levels to trade. So you have the bounce strategy and you have the breakout strategy. Just consistently practice and observe market reactions to these levels. It will enhance your ability to leverage pivot points effectively in your trading strategy. So I hope this comprehensive video has provided you with valuable insights and strategies to elevate your trading performance. If you found this video informative and helpful, don't forget to hit the like button and subscribe to our channel for more in-depth forex trading content. Turn on the bell notifications so you never miss an update. Until next time, happy trading.